What's up, traders? Andrew O'Connell here with Pristine Capital. If you're a member of the Pristine Capital trading community, you understand how crazy today's trading session was. Let's dive into every dirty detail. We're going to talk through the action, the headline indices. We're going to talk through my trades for the day. Today was one of the best trading sessions I've had in my career. So let's dive in and we will take a look at the action. So these indices, they had a pretty volatile session. S&P 500 was down 2.08%. The NASDAQ QQQ was down 2.63%. Our IWM small caps were down 2.06%. And I had shorts heading into today's session on SPY, QQQ, and IWM. Dow Jones was down 1.86%, and the ARK Innovation ETF was down 2.42%. Volatility actually did expand today in a major way. That is the big difference between today's session and Friday's session. We actually started to see that fear emerging in the market. And take a look at this breadth. This actually is a breadth washout where we only had 12% advancers in the small caps. We actually had no advancers in the Dow Jones. We had up volume of only 15.3%, and our trend model flipped from a -1 to a -3 on the open. Finviz heat map, this thing is just bloody. There were no survivors today. Energy was a relative strength area in the market, but overall it was really just tough sledding for most stocks. There were a couple leadership names that did pretty well, but other than that, it was very tough sledding. As we look at our sectors, our top momentum slots are now utilities, energy, as well as consumer staples. Consumer staples and utilities, those are very defensive areas of the market. So whenever you're allocating capital, you always have to wonder, is this the ideal environment for my strategy? And if it's not, oftentimes it's really just better to lay in wait for the opportunity, and seize it if and when it comes. At the bottom of our list, we have pretty much all these ARK funds, the blockchain ETF. Pretty much everything that was leading the market off the lows was actually very weak today and is now lagging. KWEB, the Chinese Internet ETF, was actually up 1.28%. That was our biggest winner on the session. I actually added some exposure within that group. Style factors, big bloodbath in the high beta stocks, down 3.33%. The growth style factor was down 2.34%. And we also had the small cap value down 2.26%. Now let's take a look. We're going to jump over these headline indices and just see where the heck are we at right now. So check this out. S&P 500, I'm actually quite surprised that we just cascaded right below that 20-day simple moving average. That is not what you want to see if you're bullish. I was just on a Twitter space, and it's myself and maybe like 4 or 5 other professionals talking about the markets. And I was hearing some commentary saying like, oh yeah, this is just a technical pullback, nothing to be concerned about. And to me, I don't really think that we can just say, oh, this is a little technical correction and like a new bull market, because we lost the 20-day simple moving average. If we look at the weekly chart, this is even worse. So we actually lost the yearly point of control. That wouldn't happen if this was just like, the market's going up, there's a little bit of profit taking, as there always is, a little bit of a baby pullback. That's not the case. So this is definitely something a little bit different. And not to say like, oh, let's get perma bearish or anything, but all I'm saying is I think there's a little bit more to the story, and really just more that we have to wait and see how it all shakes out. Dollar index, check this out. Where are you, dollar index? Yeah, look at this. The dollar index made a new closing high, even beyond where it was in July. So again, this to me, this is a serious market condition. And I don't want to be the person that's just like, whatever, buy the dip. I don't want to be that person. And really just, not pay attention to the signals. Most investors, they were not paying attention to the signals. The dollar index was strengthening before equities got weak. These 10-year treasury futures, look how weak they are as well. They're pulling back to this monthly value area low. Could this be an area of support? Absolutely, but we're not going to know that until it actually happens and until that level actually holds. These 10-year treasury futures, they've given back a significant portion of the gains that they've had since this low on June 14th. Let's take a look at the other indices. And it's kind of funny because my tone right now is pretty bearish, but pretty much all I did today was cover shorts. NASDAQ down below the 20-day simple moving average. We've got the Russell 2000. Is this one also down below it? Yeah, also undercut the 20-day SMA. And again, things can always strengthen, things can always improve. Maybe tomorrow's a lot better, but I think it's just a little early to jump the gun. Dow Jones pretty much closing right on that 20-day simple moving average. And let's take a look here at our Squeeze Metrics Dealer Gamma. I think this is also pretty important. So let's check this out. And we'll pull this up. Squeeze Metrics Dealer Gamma, the dark index. Boom! So take a look. Dealer Gamma is actually flipped into a negative state. And when that happens, you can get severe bouts of volatility. The market makers are hedging in the direction of market flow. So if there's sell pressure, market makers are going to be selling into that. If there's buy pressure, they're going to be buying into that. So honestly, like when Dealer Gamma gets negative, you can have big whipsaw moves to both the up and the downside. But for me, given the fact that we were pretty much long the entire rally throughout the summer, then we shorted the rally literally at the tippy top. And that's not me like just gassing myself up or being like disingenuous. Like we got the video evidence, we got the trade alerts, we got everything. So take a look at this. Yeah, Dealer Gamma is flipped into a negative condition. And for that reason, I think it's very important to just be cognizant of what's going on. The VIX also had a little mini explosion. We did close off the highs in the VIX, which is good. It's always good when you see that long upper wick. So that's definitely a glass half full right there. And let's take a look at some of my trades for today with that said. So I did no common stock trades today. Look at all of these options trades. So let's actually just pull them up in the Discord. And yeah, appreciate everyone that is a Pristine Capital member. You guys are all awesome. And thank you so much for believing. Let's check this out. This is our trades channel. And this is everything today. So my mindset heading into today's session was, oh my gosh, our overheat model worked. We got out of the market literally at the top. And I got very short the market. And you guys know this, like the recap videos have been titled like getting short, getting shorter. And so today my goal when I saw this big gap down, I said, you know what? I'm going to close out these shorts because I'm not going to let anyone take this away from me. So I ended up closing out half of my SPY September 16th 428 puts for $15.47. I had paid $9.13 for those. Very nice winner. I closed out my NASDAQ September 16th 331 puts for $15.71. I had paid $8.66, almost a double. Closed out half of my IWM September 16th puts for $7.70. I paid $4.12. That's a 3-star position. That one was sized up. DraftKings closed out my puts for $3.70. I paid $2.03. Closed out my half of my Apple puts for $9.95. I paid $7.65. Closed out more of my small caps for $7.80. Paid $4.12. Closed out the remaining half of the SPY September 16th 428 puts for $15.92. I paid $9.13 for those. And I closed out the remainder of the small cap puts as well for $7.74. Paid $4.12. I did end up adding some actual long positions though. So that was just me cleaning house on all those shorts. Now that we've undercut those levels, I just don't see the same asymmetry that I saw before. And it can be very emotionally destabilizing if you have like some big gains and all of a sudden, like let's say the volatility just works the other way. Let's say tomorrow's a massive green day. It could certainly be the case. All of a sudden I'd be like, oh my God, I just blew it. And don't want to do that. I'm always optimizing for nailing down decent profits. That's a huge mistake people make. They try to optimize for selling the low if they're short, or like covering their short at the low. And they try to optimize for selling the top if they're long. And your margins for error, if you're doing that, are so razor thin, it's very tough. So always optimize for nailing down decent profits. Yeah, so we closed all those out. I sold some put options in RMBS, which is a semiconductor stock. The 27 strikes, collected 75 cents for that. I actually got long the DQ October 21st 65 strike calls. I actually sold the Hut 8 Mining October 21st, 1.5 strike puts for 16 cents. We took Hut 8 Mining from about like $2 and change all the way up to $3.52, sold the top, bought puts in Hut 8 Mining, rode those down, closed those out for a winner, and now I just sold these Hut 8 Mining puts expiring in October. And I don't mean to be braggadocious, but this has been, like, for me, the best sequence I've ever had in my trading career. It's pretty insane. And I was looking at my stats in TraderSync. I do believe, and I'm going to send this to everyone, like, if you watch these videos, you're going to be receiving a marketing email from me. Like, we're on, I believe it's a 23 or 24 trade win streak, and that's not normal at all. So I want to make sure that, you know, when this happens, you know, the devil always comes for you after your best trade. So it's very important for me to do nothing different. And I want to make sure, one of the big errors I've made in the past is you have a really good sequence and then you start sizing up everything just like way too big, so you get overconfident. I want to make sure sizing methodology is going to stay the same. And right now I'm going from, I saw a huge edge, now I really don't see that much of an edge. So I want to make sure that I act accordingly. And to be honest, like, yeah, now once you hit some big winners like that, you afford yourself the opportunity to be more patient for the rest of the year, because you now have more money and it's like a compound return that you can generate. So now I'm in no rush to do anything else. I'm not concerned about buying the bottom in the S&P 500, although I did buy some S&P 500 calls into the close. If we open up pretty strong tomorrow, I'm probably just going to pull those off for like a little base hit baby winner. We'll see what happens. But yeah, I did end up getting long those SPY calls. RMBS, this stock, if I end up taking delivery, it'll be right around the 200-day simple moving average. Hut 8 Mining, this stock just got bombed out. And my thesis is, like, even if tomorrow's strong, I do think we could have a rough fall. And rough might mean a sideways move. Rough might mean some rallies and some pullbacks. Like, the market, it doesn't always move this way that it's been moving recently, where it just rips higher, rips lower, rips, like, it doesn't always happen like that. So for me, it's like, how would I perform if we had like a 5-week pullback? Would my system allow me to prevail through that? How would it work if, you know, conversely, we got a rally or whatever? Like, I just want to make sure that my bases are covered. And while my trend model's at a -3, my priority is not like rip the cover off the ball and nail a bunch of winners and like buy the bottom and stuff. When my trend model's at a -3, my goal is not losing money. It's just capital preservation. So effectively, while it's at -3, if I really wanted to, I'm not going to do this. But for example, if I didn't even run the trading group, you know, I'd be like, okay, it's at a -3. I'm going to take however many days off the screens that I want. You know, that's the beauty of being a trader, that you're not in that 9 to 5, like, you get paid for the amount of hours you put in type thing. But I'm not going to do that. You know, for me, I still monitor the market. I still think there's some opportunities out there, but I'm just going to keep a bit of a slower pace. And, you know, if the market does end up going in a really nice uptrend again, our system is going to capture that. I don't really have to worry about nailing that bottom or whatever it might be. But yeah, take a look here. There were some stocks that were really standing out, and a lot of our members were calling them out. And I think that's the best thing. Shout out to everyone in the Pristine Capital trading community. You guys really are awesome, and you really are making me better. So that's very, very important. And some of these names, these are names that some of our members called out. Celsius. This one remained strong even during today's weakness. This was one of the names on our Pristine Capital weekend watch list. And yeah, this one bucked the trend of the market weakness, which is fantastic. PRVA, which is a stock that we had on the long side, and we closed it out right around this 40 level. This one actually moved out to a new high. This one looks pretty good as well. But that said, if I were to draw a trend line here, take a look. Let's actually just go through the exercise of drawing it out. PRVA, if I were to draw the trend line, let's just very rough and crude. Look how close we are to the top of the trend line. If I had nailed PRVA in the first 5 minutes, like, maybe that's great. But like, even a stock like this, am I going to get odds on my money if I buy it now? If I do, I'm basically playing for like a parabolic move where the shape of the trend changes. And it's like, it's very tough. So for me, again, I'm not really in a rush. I can afford to let a couple of stocks slip by me. What else? There were other names that were moving very well also. CF. Again, you know, this stock, how much more meat is on the bone? Who really knows? But pretty nice move today. MOS, very nice move. CSIQ, also a very nice move. And this one does have really strong fundamentals as well. But yeah, it's very tough because like, what am I playing for if I buy it right here? I think the play really was like buying it off the 20-day simple moving average. But yeah, maybe I'm playing for like a move up to like 50 bucks. It's pretty, that's not bad. That's like a 10% gain or something like that. But yeah, I think it's just a little bit tough. For me, I'm not really seeing like huge edge, which is fine because we just had a signal that had a lot of edge on it. So yeah, for me moving forward, tonight I'm going to be doing a bunch of scanning just to really see what happened under the hood. And I want to make sure that nothing changes in terms of my process. I don't go crazy and start doing, you know, wild trades and all that. Right now I have about 8% net long exposure to the market after coming into today pretty net short. So yeah, I kind of leaned in like maybe we will get an overnight bounce. And yeah, if we get it, I'm probably just going to sell some stuff into it. With that being said, thank you so much for tuning in to tonight's video. You guys are awesome. And as always, we're going to see you all tomorrow.